China has amassed more debt in recent years than in other countries just before they had major failures. Watch as they attempt to increase this amount as conditions get worse. If domestic consumption doesn't pick up, they will need to pick up the slack through interventionist policies. You came here for the truth, so let me unveil that for you. Today we're going to talk about China, but first I want to discuss the S&P, specifically this. Margin debt net credit balance versus the S&P 500. What you need to understand is this. The S&P, on average, since 1980, has been moving upward. And you will see something during these times when you have these very extreme increases in the stock market, you also have something else, and that is extreme amounts of debt and investors having negative net worth. Said differently, of course. Look at this. Year 2000, you had that inverse relationship clearly present. Net worth goes down, the amount of debt, and stock market rises in an upward fashion. Same thing from 2008, and lo and behold, an extreme case right now where you have the stock market rising dramatically just in the past couple of years, and debt has just gone to such extreme levels. And that doesn't surprise me one bit, and I know it doesn't surprise you either. Let's read what they said at the bottom because I think it is very telling. These days, every rising asset price, every single bubble comes at the expense of enormous increases in debt, something I completely agree with. And there are still people who wish to claim that this is not a bubble, that it's okay to get deep into debt to purchase a home or stocks with leverage, can't miss out on those rates. And sure, that is still true in theory. All you have to do is get out in time. If only the Fed can get out in time, if only you can get out in time. That's what concerns me, something I've mentioned many times. I just want to move on quickly through this video. I don't want it to drag on too long. The CME group. Okay, now a lot of people ignore this. Those people who are invested. But it's okay. If you are invested, I am not speaking negatively of those people who are invested in the stock market or bonds or anything else. I don't recommend that. I don't recommend it in my books at this time. I don't recommend it in my videos because there's too much risk and fragility. And so one of the issues that I have is that there are stock market incentives, purchase incentives for central banks to buy up shares. And look at this right here. Central bank incentive program right out of the CME group. What is the incentive program? It allows qualified participants to receive discounted fees for their proprietary trading of CME group products. One of those things is that you must be a non-US central bank, multilateral development bank, multilateral financial institution, sub-regional bank, and so on. So basically it says, look, if you are basically not in the US, not a US central bank, but you are the AIIB, for example, or the World Bank, or the IMF, or a foreign central bank, Bank of Japan, you can get in on this. Execute all trades in the qualified participant's name. It's also important. It gets into some other things. I won't talk about that. Essentially, look, if you're a central bank, you're going to get these preferred rates. You're going to be able to buy up these shares, and you're going to be able to obviously print up that money. So it's all fictional. Doesn't matter though, because it's propping up the stock market. It's propping up assets. And these are some facts that people cannot deny. Company valuations are at sky high right now. At 26.44, the S&P 500 PE ratio is the highest ever, except for two occasions, 2008, 2000. And those ended pretty badly, I assure you. At 28.93, the Shiller PE ratio, looks at the company valuations over a longer term, a 10-year period, adjusted for inflation, is the highest level ever, except for two occasions, 2008, 1929. Those ended badly as well, as far as I'm aware. Price to sales ratio are near the highest levels in 50 years. Price to book ratios haven't been this level since the 2008 crash. And the stock market cap to GDP ratio is the highest since the 2000 crash. All of these are facts. All of these are very important. Does it mean the stock market is going to crash tomorrow? No. Can it go on a lot more? Yes. But the intervention needs to continue. That's my point. A lot of people say, I don't care, because I'm simply trying to ride the wave. And if you are, and if you're making money, at least you believe that you're making money, then go with it. If that's what you want to do, I'm not here to stop you. I'm here to present the facts. Percentage change in private sector debt 5 years before a major downturn. Look at everything that has happened here. US prior to the financial crisis. Japan leading up to their crisis that they have never been able to get out of. And it goes on. All of those pale in comparison to what we are seeing today in China, up until Q3 of 2014 anyway. That's the stats. That's from the BIS, the IMF, and the National Bureau of Statistics. And you can see clearly what has happened. Massive amounts of debt have been accumulated, and it's not stopping. I assure you, this is going on. The extreme levels of debt consumption have been very apparent. Credit to GDP gap as of Q1 2016 in terms of percentage. Look at this. Huge. Compared with Asia as a whole, you can see that is significantly different. And look at this. China's 30% credit deviation ratio implies distressed assets of $3 trillion. We are talking extreme levels of toxic assets, in my opinion anyway. And that's the way that we look at it when any of these countries take on massive amounts of debt, whether that is in the toxic realm, whether that is in the so-called AAA and everything else. If they're taking on any type of debt, bonds, corporate debt, anything, look at all the, in fact, if you look at the percentages of all the debt, all of it's garbage that all these countries are buying. When you compare them to, look at the situation here, it's terrible. Spain, Portugal, and others, where they have been the ones producing so much bad debt. You have countries which are buying it all up, and it's not going to end well. 2017 announced store closings. I mean, this is 2017. And all these huge stores, all the way down, Radio Shack, Payless, and so on, closing in total, we're talking about thousands and thousands of stores shutting their doors. Now, it doesn't mean that the company is necessarily going bankrupt in some cases, but it is showing you that things are changing and the economy is not getting better. It's getting worse. Venezuela. The bikers thundered up in a phalanx of red jackets and dark clothes, some with their faces covered, driving motorcycles before 1,000 protesters in Caracas. They threw tear gas and so on. They pulled pistols and fired. Somebody got shot and unfortunately was killed. And now what has happened is essentially like militias who are now protecting the president in charge, and things are going haywire. There's chaos that is taking place right now. I believe that this is going to get much worse before it gets any better. I don't know if this statistic is true. I mean, it's so incredible to think that. But 1 in 5 UK adults doesn't know how to boil an egg. I mean, I've read a lot of statistics over the years. This one to me, it seems pretty extreme. I don't know. There's a lot of other information here if you want to read that for yourself. Take a look at it. That's all for this video. I just want to tell you a couple of things right now. I'm pretty upset about this. But this is what's happening. We've received warnings of it previously. And YouTube creators are generally upset. And for good reason. I received this email. Usually I get these emails one at a time. And they are sort of sporadic. But I have noticed recently an uptick in this. Essentially what it says is that thanks for submitting your videos, but they weren't approved for monetization. If you look at this video right here, this is my first video, 2011. It's not approved for monetization. And many of these are actually, in fact, some of my first videos. I mean, this one right here from episode 9. That's probably, again, 2011. They're going through all of them, fine-tooth comb, and banning all of them. I don't care about the money. In fact, these have like a couple hundred views. They basically got $0, but I put monetization on all the videos. And they're just going through, and I think now it might be a manual situation because it was just before the robots were picking up randomly. I don't know how they were doing so. Now they just went through and grabbed a whole bunch. Then the video I had posted previously, not last night but the night before, this one here, Venezuela, mass panic, food shortages, power outages, huge clashes, will you be next, is the title. This one received a notification separately. I looked through the title, description, tags, comments, everything that I personally wrote down. There is no mention of war. There's no mention of ISIS or violence or anything else. None of that. I mean, I said huge clashes, but is that really something? Power outages? I mean, I don't know where the algorithm's being tripped up. The only thing I can think of is now individuals are upset at me and they're flagging the videos. And that's sad. That's truly, truly sad if that's the case. I don't know what's happening. I'm upset about it. And what I'm doing to hopefully mitigate this is the content's going to stay the same. I'm going to be very cautious with what I put in the titles and descriptions and everything else, as I always have been. I'll be even more cautious. And I'll probably try to show you this in the next video, but essentially what I've done, instead of putting the sources in the video description, I've created a Google document which I'm sharing with everybody. There'll be a link in the description that will be a link to that Google Doc, and it's going to have all my sources in it. So I'll be doing it by date, and you'll just have to search through by date, go down, and you will see all the sources from that particular day. It's, I would much prefer to have it in the video. These are the steps I have to take. I don't want my videos to be knocked off from YouTube not because of the money, but because specifically that, by the way, these days, especially, even the biggest creators out there don't make any money anymore. I don't know what the heck YouTube is doing. You're supposed to try to invite people in, but anyway, it doesn't matter. I didn't want to do this way. I wanted to be able to have that there so an individual can just go in the description, click the link right away. It's one extra click. This is what we have to do. So I hope you appreciate that anyway, that I'm including my sources. I always do. But I'm thinking maybe it's they are able to see into the link and see what those are about. So this way, even if it's controversial now, I can post it. I think I'll be okay with that. I'm going to try this anyway. This is going to be the trial and error. So we'll see what happens. If you found the video informative, if you want to support me, please give me a thumbs up. Last but not least, if you found this video informative, I know you will find my books, The Money GPS and Global Economic Collapse, even more informative. So head over to Amazon where you can actually look inside the book for yourself. Take care. And you will see something during these times when you have these very extreme increases in the stock market. You also have something else, and that is extreme amounts of debt and investors having negative net worth. Said differently, China has amassed more debt in recent years than in other countries just before they had major failures. Watch as they attempt to increase this amount as conditions get worse. If domestic consumption doesn't pick up, they will need to pick up the slack through interventionist policies. You came here for the truth, so let me unveil that for you. Just in the past couple of years, and debt has just gone to such extreme levels. And that doesn't surprise me one bit, and I know it doesn't surprise you either. Let's read what they said at the bottom because I think it is very telling. These days, every rising asset price, every single bubble comes at the expense of enormous increases in debt. For you. Today we're going to talk about China, but first I want to discuss the S&P, specifically this. Margin debt net credit balance versus the S&P 500. What you need to understand is this. The S&P, on average, since 1980, has been moving upward. Of course. Look at this. Year 2000, you had that inverse relationship clearly present. Net worth goes down, the amount of debt, and stock market rises in an upward fashion. Same thing from 2008, and lo and behold, an extreme case right now where you have the stock market rising dramatically